Okay, I think I'll go ahead and get started. Good morning, everyone, and welcome to the 2021 CCDEH training series. My name is Jeff Lamore, and I'm the current president of CCDEH. The training series was developed by CCDEH's Professional Development Committee to make up for the cancellation of this year's CHA conference. Each session will be recorded, and CEUs will be available to all. The fee for each session is $25. You can also go to CCDEH's video library. Tim's going to pull up the screen now. You can go to CCDEH's video library for other recorded sessions to obtain additional CEUs at your choosing. In order to obtain your CEUs, you must complete and submit the evaluation form, which you'll see here in the bottom of the page. There you go. Please make sure you enter in your full name and email address. All evaluations must be completed by May 27th, and certificates will be issued by June 7th. Just to keep in mind, the next training session is scheduled for Thursday, April 22nd. There will be a question and answer period at the end of today's training session. Please use the Q&A function to submit your questions. So please use that Q&A function to submit any questions you may have. I'd like to thank Justin Milan, Cheryl Baldwin, and Tim Snelling, and Freddie Adrian for their work on developing this training series. And with that, I'd like to introduce Mr. Freddie Adrian, Environmental Health Director with the City of Vernon and the Chair of the Professional Development Committee. Over to you, Freddie.
Thank you, Jeff, and good morning, everyone. Today, we are in for a treat. This is the second part of our training series, as Jeff mentioned. So we have a great speaker with us today. So I'm going to go ahead and introduce our speaker for today. It's Ms. Jami. Ms. Jami Aggers is recently actually retired environmental health director from County of Stanislaus, and she is actually Stanislaus through and through. She worked in this industry for over 36 years, with 30 of them spending at the Stanislaus County Department of Environmental Resources. So as you can tell, she have a breadth of experience, through this in our industry. She's gone through the gamut of being an environmental health specialist, actually starting off as a sanitarian and going through the whole process, becoming a director. So I think she's really what she's going to present today. We're looking forward to her presentation. And it's going to be about giving an overview for supervisors when it comes to budget and new directors. So I hope everyone enjoyed this presentation. I know she's put a lot of work into putting this together, and I'm excited, and I hope you are also to participate in this presentation. But I think, as Jeff mentioned, also please have your questions ready. And I know I'm looking forward to this, so I hope you are. So thank you for joining us, and I'll hand it off to Jami. Thank you, Jami.
Hey, thank you, Freddie, and thank you everyone else for the nice introduction today. Do I need to go ahead and bring up my presentation at this point?
Yes, please.
Yes.
So go to here.
Yeah, sure. So show your screen now, and off we go.
Okay. All right.
Perfect.
Okay, we'll go ahead and get started. Just a couple of things really quick. This is a presentation that I modified from one that I did for my staff. I think I called it Budget Basics last summer. And many of you may be already quite adept at the whole budget process and some of the terminology that goes along with. So I apologize if it's a refresher course for you, but the intent was to try to help new supervisors and new directors with some budget basics. So some of us are just earning some CEUs today, which is also good. And just very briefly, I wanted to let you know that the educational objectives that we're going to try to cover today are what is a budget, and talk about budget intervals. We're going to talk about different types of revenue sources that you may or may not have. We'll talk about how to evaluate your program costs. We'll also talk about expenditures, and then finally, your approved or legal budget. And so with that, I'm going to advance to my first slide and hope I get this right. Okay, I think we're good to go. I have my technical support here in the room with me, so I think we're off to a good start. And the county was nice enough to let me come back and teach this week's class from my office so that I didn't have any technical difficulties. So it looks like we're good to go. All right, so here in Stanislaus County, and that's what I'm going to be speaking from because my entire environmental health related employment has been with Stanislaus County. So I'm sure there's some similarities to how things are done in other counties, but that's where I'm going to be speaking from. And if you're at all like me, most of us that do this type of work in public health and environmental health, most of us are science type majors and we're not accounting or business majors. So maybe the first time you get introduced to some budgeting, you had a similar reaction to what I did, which was, oh my gosh, I'm good with numbers, but I'm not necessarily a numbers expert. And I think my eyes started to roll back in my head when I first looked at financial reports. So hopefully we'll debunk some of the mystery out of that process for you today. All right. So here in Stanislaus County, the budget process, quote unquote process, seems to never end. We have multiple cycles, and I've listed them here for you. The first is proposed budget, which we were just completing as I was finishing my last working day about 2 weeks ago. And we do proposed budget to make sure that you have a working budget and an approved budget in place by the time our fiscal year starts each year, which for us is July 1st. And in the process, there are various intervals. We also have to prepare final budget, which is after the state does things on their end, and we have to sometimes true up things in the budget at final, and that's typically in September. But mostly we're limited to things that our county likes to call technical adjustments. So some of the changes at the state level can sometimes impact what we do. We're typically not allowed to make significant changes in our budget at that point. So it's really, really important that you get your proposed budget dialed in as completely as possible. So then moving on, we also have first quarter, mid-year, and third quarter. And in first quarter, our goal is to not make any changes at first quarter. Budget adjustments are kind of frowned upon. What's more important for us is mid-year, halfway through the year, where we're asked to do forecasting. So we're looking at what we projected to happen in our budget that we set up compared to what's actually happening. And sometimes making adjustments are allowed at mid-year. And then lastly, third quarter, which takes us through March of each year. And that's about the time we're starting proposed. So like I said, here in Stanislaus County, budgeting seems to never end. It's an ongoing process. One of the things that we were challenged to do here in Stanislaus, it started a couple of years ago, was to prepare a 2-year budget. And so we're currently now in year 1 of our second only 2-year budget cycle. And so again, preparing that first year, which is basically a proposed budget, is really, really critical. And then it ended up being a lot more work, a much heavier lift to prepare a 2-year budget cycle. But when you get to the second year, it's mostly kind of a roll forward budget at that point. And so it's a little bit easier of a lift. I don't know if that's very common out there in counties now, but it's something that Stanislaus wanted to do. And I will say that one advantage of preparing a 2-year budget is that you're not just focused on, do we have enough money to make it through this year only, but it forces you to push that time frame out a little farther to make sure that you're doing longer range planning. Okay, so I think we're going to go on to the next slide here. Okay, so once you have your approved budget in place, you have to live by it unless you're allowed to make what I mentioned earlier, budget adjustments. You can make adjustments in both income or revenue and expense transaction changes against your existing budget or your current budget. Making adjustments on the revenue side is less critical because if you end up with more money, the revenue can just flow in, and that's always a good thing. But on the expense side of things, you can't spend beyond what you have authority to spend in your budget. So for us, if you need to make an adjustment, you do that at either first quarter, mid-year, or third quarter. And staff are often not allowed to make things like staffing changes occasionally, but we have to have a lot of justification. So again, it's very, very critical to get things set up in your proposed budget and to try to avoid making budget adjustments at different intervals. I'll give you an example. We're preparing both mid-year and proposed at the time I was exiting, and one of the mid-year adjustments that we wanted to make was for our landfill division. Landfills buy really expensive equipment. The giant Tonka truck type things that we use out there are very, very expensive. And we had initially put $1.5 million in our fixed asset account for a piece of upgraded equipment. And when we got the estimates recently, it was more like 1.7 million. So we asked to make a $200,000 budgeted estimate, and we were allowed to do that. But some other things we asked to make adjustments for are not being recommended for approval. So we have to live with that. Let's see. I think we'll go ahead and move on to our next slide. There we go. Great. Okay, so we're talking about what different revenue sources you might have. So general fund contribution is the first source and is a partial source for us here in Stanislaus County. General fund contribution are tax dollars that your governing body has the discretion to spend on whatever it is they choose. In our department, we receive general fund contribution for things like our code enforcement program and our groundwater management program. But our other traditional programs, environmental health, hazmat, and so on, are mostly fee funded. So the next main source of funding is county match or maintenance of effort funding. So those are usually state funding where if monies are put up locally, the state will match those. So it's a way of leveraging your dollars locally to stretch them out farther. And as I mentioned earlier, fees for service. So those are where you're charging a fee for your inspections, your plan check services, and so on. And also realignment funding is another type of funding that very commonly comes to public health related programs. And our environmental health programs do receive a portion of this funding. Here locally, the majority of that source of funding goes to our public health department, our health services agency, and then us. And the source of realignment funding is either vehicle license fees, we call it VLF, or sales tax revenue. And that was a source of revenue that was negotiated clear back in 1991 for Stanislaus County. And the intent of those is to provide greater funding stability for specific health, mental health, and social services programs to cover the cost of things you either can't charge a fee for or those that you can't charge a high enough fee for. So an example would be like a surfacing sewage complaint that you have to go out on. You can't really charge a fee for that. Or a program that you can't charge a high enough fee to cover the cost of. The biggest shortfall for us would be our LPA program as an example of that. But I will warn you that there are frequent attempts to grab realignment money at the state level, particularly when there's an administrative change. So you really, really have to watch out for that. There was an attempt at a grab just a few years ago, and our county's lobbying agency worked closely on that and tracked that, and we were able to survive another challenge, but it is something you really have to watch. And I'll also point out, as I was going over my notes today, that about exactly a year ago, there was a lot of chatting going on amongst the various directors about funding sources. And I'll give credit to Warren Farnham from Modoc County. He put out a really great analysis that involved realignment funding in an email, and I had printed it and saved it. So if Warren still has that, that might be something that he could share out. And then lastly, other funding sources. Those can include various things such as fines or penalties you may charge, grant funds, any interest that's earned on your revenues, witness fees, and so on. Those can cover a portion of your costs as well. But we rely much heavier on the other types of revenue sources here in our county locally. So with that, we're ready to move on to the next slide, which I have some pages out of our most recent budget.
Mine doesn't like moving either, so let me try it again. Funny. I don't know what's going on. So.
Jamie, while he's doing that, there's a question. What are some of the maintenance of effort funding received by your group, and are any solid waste related?
Are any solid waste related? In our case, I don't know that any of the maintenance of effort is solid waste related. That's just another type of state funding where if monies are put up, they may be matched so that you can maintain the effort of health-related programs locally. Okay, so it looks like we got our next slide, and I apologize that it's very small print, but I thought it would be helpful if you haven't looked at financial reports before to take a snapshot of a few from our current budget. And so this is what we refer to as our main, we call it our DER, which is Department of Environmental Resources main budget unit. We do have separate budget units for various other things, but this is where the majority of all of our expenses are included. So this is the revenue side, and in the first column, you'll see that's our legal budget. So that was our proposed budget with any true ups from last June and September. And this is the revenue side. So for some of those other types of funding sources we mentioned, at the very top in that first group, you'll see nuisance abatement. That's part of our code enforcement program. Any hazmat settlement revenue that we thought we might get for the year. So that category as a whole is, you can see in the smallest print at the bottom of it, fines, forfeitures, and penalties. And then moving on to interest, we usually don't budget for interest because we just don't want to count on any particular revenue amount. And then any that flows in, it flows in. And then we have some more other revenue, which is federal monies, state monies. So federal money, an example of that might be, thank you, that's helpful, circling the arrow around. Federal money would be like some of the COVID reimbursement monies that we anticipated receiving this year. But the bulk of our revenue starts in the next category series, the 33,000 series, and those are our fees for service. And you can see there that we have it broken down in quite a lot of detail, and that is helpful to us when we are doing our forecasting and figuring out the various aspects of our budget. So we've got all kinds of things there: milk and dairy violations, milk and dairy plan review, well permits that are related to hazardous materials, food processing waste, which is one of our solid waste programs, and so on. And before we move off of this page, I'll just also go over a couple of the other columns there. So you compare everything to your legal budget on the left to your actual revenue at the period of time. And this particular snapshot was from last November of 2020. So 5 months into the year, which is not quite 50%. And then you have your year-to-date actual. And then unrealized revenue is just the difference between the two, what hasn't rolled in yet. And then the percent. So since we're not at 50% of the year yet, you can compare, are we either, above or below that, just to kind of see what your status is at that point. So you can see in one case, we have a 70% of our revenue was already received. In other cases, it's, well under 50%, and in some cases close to that. Okay, so moving on to the next slide. We have just the continuation of our fees for service, and all the way down to 39,100 in the series. And then we move into the 40,000 series of revenue types. And again, these are just other miscellaneous revenues. You can see if we charge people to make copies, if we have witness fees and so on, which is a very small category of revenue. And then down at the bottom, you can see in the 46,610 line item, there's your 1991 realignment number. And you can see it has a very tiny VLF next to it. So that's vehicle license fee or realignment funding, which is a big chunk. You can see $700,000. And then county match, which is your maintenance of effort or general fund contribution. And again, in our case, that's mostly for our code enforcement division and our groundwater management division. And so the very last slide on this particular topic shows you that we estimated our revenue for the department, the main department. So those parts of what we do that are in their own separate budget unit, $7.4 million in revenue. Okay, that becomes important. Remember that number when we get to talking about expenditures here in a few minutes. So moving on to the next slide. Thank you, Tim. We're going to talk a little bit about how to evaluate your program costs versus your revenues. Okay, so I'm going to tell you what we do here in Stanislaus County, and hopefully there'll be some pointers that you can kind of use in your specific situation. So we're going to go to the, let's see, I think I got ahead of myself. Before we put up the polling question, sorry about that. Let me just share with you what we do. So you can see it there, but we just won't tell you that. We won't reveal the answers yet till I cover a couple more points. So here in Stanislaus County, Environmental Resources is a fairly large department. So we use an electronic data entry tracking program that's called Daily Activity Reports, or we refer to it as DARS. And staff use it to track their time in different program areas, including travel time, including training time, vacation time, sick time, etc. So we can print those reports and see how much time is spent in various program areas. And it's great for doing things like charging time and tracking time that you can charge back to a grant, or tracking COVID time, or when you have a natural disaster of some sort in your area, and your various program costs. However, if you simply were to take the time in your tracking time, we call it DARS, and multiply that by your weighted labor rate cost, it may not be as accurate as you would want it to be, because the staff don't account for their break times in the DARS tracking that they do. So their time wouldn't necessarily add up to 2,080. So the way that we rely on more heavily than our DARS is we have our timesheets that are all done electronically here in the county. They're all tied to a various budget organization number that's specific to environmental health, to hazardous materials, to milk and dairy, and so on. So that allows us to drill down even deeper in a subset of those financial reports that we just looked at to figure out what our specific costs are in the various program areas. Now, that might not work for smaller counties where staff have to wear a lot of different hats. But in our department, we're large enough that we have, a separate environmental health division, a hazmat division, milk and dairy division, and so on. So doing that allows us to keep our costs, our revenues and expenses separately and track more with more detail. Just also wanted to point out that services and supplies are things like, your office supplies and maintaining your office equipment and contracts that you may have and so on. Those can be tied to a specific budget organization number as well. And if you aren't able to do that, you can also consider allocating costs on a percentage basis to help factor in the administrative overhead and so on. All right, so I think now we're ready for that second polling question. So let's see what people think about what is the biggest cost in your overall budget. Okay, this one was a no-brainer, so I was expecting everyone to get this right, so good job. Absolutely, you're spot on, because your people costs are your biggest overall cost. Salaries and benefits by far and away. Your other costs, at least in the way we do our budgeting here, you have salaries and benefits, your services and supplies, and then we have, let's see, can we go to the next slide? Or maybe we're stuck again. We can work with that if
yeah, I'll get there. It just is being kind of feisty. I don't know what's going on with it.
Jami, while he's doing that, we have a question that came in.
Okay.
What are typical sources of interest revenue? Is this from something like an interest-bearing account from a bank?
Good question. Because we maintain a fund balance, we earn interest on those monies. The Treasury Department is the one that oversees that. But there may be situations out there where the interest is being earned, but perhaps not rolling into your account. Maybe it's rolling back into the general fund. Based on how it's set up in your county. We also have, I'll give you another example. We had a code enforcement case that went to the courts to be settled because the person was a bit obstinate and refused to comply. And he was so stubborn that he lost in court, and he had to pay about a $200,000 settlement. And the board decided that money would be set up into its own fund, and those monies would be used to do environmental cleanup. And so it sits in an interest-bearing account. So it earns a little bit of interest each year, and until the funds are completely exhausted. So hopefully that's helpful. All right, so back to our slide. on the various expenditures. We'll look at the financial report in just a minute. And when we do that, you'll see that it's broken down into these main categories. Salaries and benefits. So since our biggest expenses are people, if you have to trim expenses, then leaving positions vacant is the most significant way of cutting your costs. Then next category of expenses, we have services and supplies. So I think I mentioned earlier, that's your contracts, office supplies, travel, training, in our case, fuel, because the county doesn't maintain its own fuel station anymore. We contract out with a local provider for the fuel for our vehicles. And then the next category is what's called cost allocation plan, or we call them CAP charges. This is where we as a department, just like all other county departments, get charged for the services that others provide us. So that's your auditor's office for doing your payroll and processing, all of your payments and everything, county council, purchasing department, liability, and so on. And let me tell you, folks, these costs can be substantial, very substantial in your budget. And you have, in our case, we are just told, when we're preparing budget every year, okay, here are your CAP charges for the year, and we simply have to plug it in and make it work. And then last is the category of fixed assets. So those are typically your vehicles. In our case, equipment over a certain threshold, which is about $5,000, on-site improvements, and so on. So I think we're ready to move to the next slide, which is where we're going to drill down a little bit like we did on the revenue side. And we're going to look at some expenses. I know Tim's working on pulling up that slide for us. There we go. Okay, so we're again, okay, great. Again, we're looking at just a snapshot from that same November 2020 timeframe out of our main budget. And you'll see salaries and benefits there in small print under the 50,000 series numbers. And wow, look at that, $9 million. And that is the vast majority of our expense side, and that's our people costs. If we spend all of that, and I will tell you that we have currently several positions that are budgeted for that we're not filling. And I'm pointing that out because if you remember on our revenue side, that was in the neighborhood estimated to be 7.4 million. So obviously there's a large gap there. So we're either, to make up that gap, we're either spending money out of our savings account, which is our fund balance, or we're just simply not spending the amount that we're authorized to spend. So this is the maximum amount that we're authorized to spend, $9 million in salaries and benefits for the year. And I only copied, I think, one page out of this because you should be getting the idea by now. It shows again our month to date actual expenditures in the second column over, and then year to date. And there's no outstanding encumbrances because we don't encumber money like we would with a contract. If we take out a contract with someone, we would encumber the money or tie it up so that you're guaranteed to be able to pay that contractor and not overspend in your expenses. But we don't encumber money under salaries. That's why that's all blank. And then our unencumbered balance, which is just the difference between what you're budgeted for and what you've spent so far, and then the percent that you've spent year to date. And again, this is about 5 months into the year. We didn't budget for any fixed assets in this current year. Our budget was a little tight and we didn't need anything. One thing I'll point out on the expenditure side of things, let's say, for example, I need to buy oh, maintenance, I need to buy some communication equipment, and I only budgeted, it looks like $2,600, and I need to spend $3,000. Is that a problem? Well, not in our case. We're allowed, as long as you have money in the series, so in other words, the 50,000 series numbers or the 60,000 series numbers and so on, you're okay. That's not allowed for us under fixed assets. So I mentioned earlier the big Tonka truck toy we needed out at the landfill. We had budgeted 1.5 million. And even though we had enough money in the series, we were not allowed to do that without a budget adjustment. So we had to ask for that additional authority to spend $200,000 extra because we needed 1.7 million to purchase it.
Hey, Jamie, can you clarify your dollar amount of what a fixed asset is in your county?
Yes, in our case, it's usually $5,000 or greater, but all vehicles, all on-site improvements, those are all fixed assets.
Thank you.
Thank you. Okay, so I think at that point, we're ready to move on to polling question number 3. The question is, what are appropriations in government? Okay, you guys get the gold star today because you're right. Your appropriations are your spending authority. Cheryl, was there a question that just came in, or was that the one we just answered?
There was a, oops, am I on mute? Okay, there was another question that came in, unrealized revenue and unencumbered, unexpected balances should balance at any given time, right?
Okay, that kind of was almost two-part. Unencumbered is just the difference between what you budgeted and what has occurred year to date so far. Unless you have tied up some money, like I mentioned, on a contract, like a purchase order. When you take out a purchase order to buy some widgets, you've guaranteed to that vendor that you can pay that invoice. So those monies get encumbered or tied up. And then what was the second part of the question?
It says unrealized revenue and unencumbered, unexpensed balances should balance at any given time, correct?
Yes, I believe that's correct. Sorry, I'm just having a hard time visualizing that.
The next one was in the earlier example on equipment purchase. What is meant by having enough money in fixed series?
Well, your budget is your spending authority. And in our case, if it's salaries and benefits or services and supplies, it's okay if we don't have enough money in the individual line items, as long as we have enough money in the whole series of numbers. So you can go over in a particular line item. You can go over budget in a line item. But we and Stanislaus are not allowed to do that when it comes to fixed asset purchases. So we budgeted 1.5 million for that piece of landfill equipment, and it turned out it was going to cost 1.7. So we had to go through a formal budget adjustment process to get that individual line item changed, because we're not allowed to roll money between line items when it comes to fixed assets. Does that make sense? I hope that answers the question.
Yes, thank you.
Great. Okay, so we are on to approved budget, which is also called your legal budget, just like it showed on the financial report. It's the top of that one column. So this gives you your spending authority. It sets up your appropriations for the year and represents your legal budget. Oh, okay, we still had a typo. Sorry about that. It should say your legal budget on this particular slide. We've been looking at our main budget. We also have separate operating budgets for things like our active landfill. We have one for our closed landfill. We have one for our household hazardous waste program because we have a separate funding stream for that. So those monies are kept separate, and those things have to live and die by their own budget unit. We have one for our waste to energy project. We now have one as of about a year ago for our groundwater program, which is largely general fund funded. And then we have some smaller budgets, like we have a bottle bill grant that we get from the Department of Conservation or Cal Recycle, one of those each year. We have a separate budget for our Assembly Bill 939, which is our waste diversion programs that we run here, and so on. So altogether, we have about 15 different budget units here in this department, but the DER main one that we looked at is our primary budget. We talked earlier about if you have a fund balance, that's your savings account. And so let's say we have a few $1,000,000 in our fund balance. And like you think of it in terms of at home, you have your savings account and that's your money. If you want to pull it out of savings, you can spend it. But in government, you can't unless you have been given the spending authority and have those appropriations set up in your budget to spend. So it just doesn't work the same as it does in your personal life. You develop your projections in your budget based on recent history for both your revenue and your expenditures. And you build in various assumptions when you set up your budget each year. In some cases, your organization probably tells you to build in 2% or 3% for COLAs, for salaries and benefits. And they estimate, benefits cost increases and tell you what to use for your assumptions. In other cases, you'll rely on information that you have, that you know about your programs based on changes coming in state law, or perhaps you're looking back at a 5-year average and you're using that. In our case, when we build both our proposed budget and we do our mid-year projections, we're required to put in information under what's called a notes column, where we've said what was the basis for our assumptions. And so that when we submit our budgets for review, they can review not only the numbers, but the assumptions that the basis behind the assumptions that we used. Of course, at mid-year, because we're going to wrap up here in the next few minutes, at mid-year, we in Stanislaus are required to do a more formal review of our budget. So we're looking at, okay, 50% of the year has elapsed at that point, and we're looking at, how did our revenue come in, how our expenses, and we have to do a projection on how we will end up at the end of the fiscal year. Are we on target, or do we need to request some sort of adjustment at that time? But typically it has to be a fairly significant reason, and we have to have justification to do it. And with that, I think we'll move to the next slide. Did we go? Let's see. We have, I mentioned a couple of times, we have our main budget, we have individual operating budgets. We also may have capital expenditure budgets, and we have program budgets. Some of those I've also mentioned previously. Let's go ahead and move to the next slide, which I think, okay, is fiscal year end. Thank you, Tim. So what we do at the end of the fiscal year is when the auditor's office lets us know that everything is closed for June 30th, that allows you to go in and see how did you end up for that fiscal year. And you can tell at that point, how good your projections were and what you thought, what you thought was going to happen happened. And then you can use that information to forecast for your revenues and expenses to help you develop your proposed budget for the next year. Most of us, like I said in the beginning, we're not numbers people, but you learn as you go, and you use this information to learn from. And even though you might have been a biology or chemistry nerd like myself, you can actually learn the numbers and become familiar with the various types of funding and ways to increase your funding. You know, we have been doing a little bit of deficit spending over the last couple of years here in our county. So, you know, we're looking at different strategies. We've done some fee increases. I mentioned that we aren't projecting to buy any fixed assets. We've been leaving some positions vacant. And one of the things that impacted us here fairly significantly over the past couple of years is that prior to about a year and a half ago, we actually had 2 departments under a single department head here. We also had the Parks and Recreation Department, and we had spent several years trying to grow that department to the point that it could successfully stand again on its own 2 feet as a standalone department. And that branched off from us about a year and a half ago. And so we have left several positions vacant as we transitioned out of the parks role and strictly to environmental resources role. So it's taken a while to figure out how many of those functions we didn't need to do here any longer that we previously did. So we're getting back on track, and everything's good moving forward. So with that, I'm about ready to wrap up. So I think we can move into a question and answer period.
Hey, hey, Jamie, how big does your carryover budget get at times? That fund?
Oh, it has. We've probably hit our peak at about 6 or 7 million at one point. What was happening in that time frame was we had gone through and done a pretty broad fee increase across the board, which we hadn't done in a long time, and not knowing that the economy was going to tank back in about 2009 when that happened. And we were under a lot of pressure to leave positions vacant because there was pressure organization-wide to do that. Some departments really struggled. Some had to lay people off, including, you know, some in our parks department, some in our code enforcement program, because those are general fund funded. So we put through a fee increase, and yet we were under pressure to leave positions vacant. So our fund balance grew over a period of time, and now it's kind of tipping because we didn't do any fee increases for a long time. And so it's kind of pendulum's kind of swinging the other way. So we're at about, I think, probably in the neighborhood of 3.5 million fund balance at this point. Okay.
And you mentioned fees and fee studies. And so the last fee study you guys did was 10 years ago, or?
We actually look at our fees every year, and thank you for mentioning that. We do a 6 to 8 county comparable county fee comparison every year. When we look at our fees, we usually do that in January because the county likes to consider fee increases only once a year if they can, and they usually do that in the spring. So we come back from holiday vacation every year, we do our surveys, we all get together, all the managers compare their program costs by looking at those DARs and those financial reports and their revenue versus expenses, and we decide whether we're going to do propose any fee increases at the time. And some years it's as simple as all we change or recommend changing is our weighted labor rate because benefit costs have increased and so on. And other times we do something more broadly. We're doing some increases with our hazmat fees and some other categories currently.
Do you have one hourly rate across all your programs?
We have, yes, but we also have a separate clerical weighted labor rate that we use. Otherwise, we have just one.
And do you have a COLA that you guys automatically apply each year?
We don't. Many counties do. We do not.
Okay. You mentioned the DARs and the timesheet keeping process. Is that so people have to enter their time in 2 different systems for each of their activities?
I guess you could kind of look at it as 2 different systems because they all have to enter their timesheets if they want to get paid. Yeah. But they also enter their DARs. We like for them to do it weekly, but at least monthly to keep them current.
Okay. Here's a question from Jason. He says, considering the budget, what sort of information should a supervisor or manager present to the director or department head when requesting additional permanent staff or ongoing resources? So I know it's a challenge to add new staffing allocations and to make that justification. And we're always lagging. I know when we need new people and more positions, to help make that case. So what kind of process have you used to, as program changes have occurred or new programs have been added, to add new positions?
Right, because the $1 million question is how are you going to pay for the position? What's your funding? So clearly you need to have some justification for that. I'll tell you, getting new positions for us has always been challenging. It really kind of didn't matter if we had enough money in our fund balance to pay for a position. As far as justifying it to administration, the CEO's office downtown, what has been more helpful or makes it easier is changes in law that require us to do more things, more unfunded mandates, which, we do get that. And sometimes you can absorb that. If cottage food is added in our county, that was a fairly minimal impact. So maybe you can absorb that. And then, body art and tattoo gets added. Maybe you can or can't absorb that. But there's going to be a tipping point at some point where it's like, stop, we can't take on any more work when there's MECOs and there's, more to do with the lamp and so on and so on. There's a break point. So those changes in law and those regulatory changes that require us to do more things are very, very helpful in justifying positions.
Great. How about one-time funding sources, like when you get a grant? How do you use grants versus ongoing funding?
Oh, yes, we don't get a lot of grant funding, but we occasionally do. We did get some money from the state in the LPA program a few years ago for those folks who still have that program, and we used it to justify some of our vehicle purchases for that program and some equipment for the water program. We were able to justify some of our IT staff time in making some of the program changes that we're being required to do and the different reporting and that sort of thing. But that's tough because they're usually for specific things and not staffing costs so much.
Okay. If you have a lot of surplus, let's say carryover from one year to another, how do you address the public or other advocacy groups who say, why aren't you lowering your fees or refunding the permit fees if you're over collecting?
Okay, good point. Well, one of the ways we do that is that the realignment money, for example, that we get is supposed to pay for the cost of doing those things that we have to do, like surfacing sewage complaints, garbage complaints, vector complaints, odor complaints, whatever, housing complaints that you can't charge a fee for. But we don't get enough money to cover those costs. So that is one of the ways that we justify having a fund balance. Okay,
so maybe let me turn it around the other side. If you have a quote unquote good year of fee revenue, do you get kind of pushback from administration saying, okay, we need to lower your net county cost or your general fund support or your other funding sources that the county passes through? So do you get pushback that way as well?
We've been actually pretty lucky in not. And I'm not saying that we never have, because we've been forced to absorb things like some of the stormwater work that's required now. And we absolutely said, we're told, you can just absorb that because you have a fund balance. So yes, we get that. Right. We do.
I'm not sure what SB 1383 is. Maybe you do. The question is, have you budgeted for SB 1383 requirements?
That's the organics waste diversion program. Have we budgeted for that? Kind of yes and no. One of the positions that we have had vacant for the past year, we're going to have to use that. We're going to have to fill that position because you can't go around and be a trash cop everywhere without more staffing. So we are going to have to figure out how to fund that. And it might involve a surcharge on garbage rates.
Okay. I like this. This is kind of a fun question. Can you discuss the strategic difference between accounting and budgeting and the role of an accountant that they would play versus a manager or director?
if you have a good accountant, they're worth gold. They should be treated like gold, because they are able to do much deeper dives and trend analyses and that type of thing for you, much more so than I or one of my managers could do. And when you become the director, you need to be able to speak to 5 and 10-year trends in whether it's your realignment funding or your fund balance, and those are the things that your good accountants and finance managers can do for you. Great.
Well, Jami, you covered all the questions, and I had a bunch of questions, but you actually covered them in your presentation. So awesome job.
All right.
Thank you so much for coming out of retirement to make a guest appearance, and we look forward to seeing you again next week. Jeff, I'll turn it back to you.
All right, thank you very much, Jami. Thank you, Tim. Just a reminder, you need to complete your session evaluation in order to receive your CEUs. And also, CEU certificates will be issued by June 7th. So just keep that in mind. At the end of the series, the CEU certificates will be issued at that point in time. All right, thank you, everyone, for attending.